Okay, today I get the chance to talk to my old friend, Leesa Millham. She's with Cross Country Mortgage, has been in the loan business for quite some time, and she's here to share some knowledge for first time home buyers today. Really looking forward to this because we've worked together a couple times before, but really our relationship has been through friends and hiking groups and things like that
Yep.
up until now.
I know, right?
I don't even remember the first time I met you.
I don't remember. It's been quite a few years ago.
Yeah,
You know, you've always got to take advantage of those meetup groups.
exactly right.
And now look where it takes us.
That's
Yeah.
right. You never
You
know.
get to mix both personal and professional business together. So
Yep, totally
Yeah.
right. You just never know what somebody's going to bring to your life.
Exactly.
And what I have appreciated about you is that you're always supportive. In terms of your business, you're very knowledgeable and capable. And you've really just got a great way of connecting with people.
Well, thank you so much. And thanks for having me.
Yeah,
It's
it's
a lot
real
of fun
privilege.
having me on your podcast.
It's great. So before we really dive into the questions, I wonder if you could tell us how you ended up in mortgage lending.
Oh, so long ago. I was a pup and really just kind of started with many, many years ago, a bank that was in town. My aunt was working there and she got me on with the bank, and I kind of started in the background, auditing documents, mortgage documents. And from there it just started. I went from auditing documents, it was called in the shipping department, and then eventually went into processing, and I processed for a good amount of years, like probably at least 15 or so.
Wow.
And yeah, just like one thing led to another. I just have stayed in the industry. And so I've seen a lot of the ups and the downs.
Yep.
A lot of us that have been in the industry as long as I have, that's when we know how old we are. Because when I was a processor, I used a typewriter. So, and a lot of documents had carbon copies. It's like, okay, we've been here a long time. But so yeah, I just started a really long time ago, and just have eventually, went from those kind of positions and now into right up front, being able to be face to face with the clients and helping them with their financial choices, whether it's a first-time home buyer, second homes, investment properties. It's just really fun to be able to help somebody navigate and go through that process.
Yeah.
And they're really excited because they can see the wealth that can actually happen and develop with real estate.
I can imagine that you really help those first-time buyers stay comfortable and loose through the entire process.
They're my
rather than getting
favorite, I'll
nervous.
have to admit. And even now, after all these years, the majority of my business is still first-time home buyers.
Wow.
I have, obviously I want to try to be my client's lender for life, and they'll reach back out to me when they're ready to either get out of their first-time home buyer home and into another home. And a lot of them do that. It's like, just trying to stay in touch with them, because sometimes it could be 5 or 7 years down the road.
Right.
But yeah, first-time home buyers are a lot of fun. So I'm glad that that's what you want to highlight today.
I do. Yeah, I remember my first purchase of a home, and there's just so many steps that you don't understand. There's lingo and terms that you've never heard. It really is helpful to have somebody guiding you through the process. So you mentioned these first-time home buyers. What are the types of emotions that you have to walk your buyers through in the mortgage process?
A lot of times it's nervousness, anxiety, a lot of those kind of emotions, just because it's new. They're nervous to be thinking that they're going to be buying a home, but there's also a lot of excitement.
Yeah.
Because they're buying their first home.
Oh, yeah.
Recently, some clients that I worked with, and it was their first home. Towards the end, I was probably getting a text message from them every other day. And a lot of it wasn't even so much even questions anymore. It was just, we are so excited. Thank you so much. And I would actually hear from him more than her. And sometimes I would get a text just saying, thank you so much for all your help. We're just so excited. And sometimes he would even tell me, I'm so sorry I've been texting you so much. I'm like, that's okay. You're excited. I'm excited for you, excited to see, get this to the finish line.
That's a fun process.
Yeah, so it's a lot of fun.
How do you reassure your buyers when they're feeling nervous?
I just tell them I'm here to hold your hand the whole way.
You've got somebody looking out for you.
Yep.
All right. Well, let's talk about that process of buying for the first time. What's the biggest misconception people have about buying their first home?
I think a lot of the misconception, a big myth, is everyone thinks two different things. You have to have incredibly perfect credit, and you have to have money for down payment. And those are two things that we really don't need. Yes, we need good credit, but it doesn't have to be stellar and a 800 credit score. The most popular loan program for first-time home buyers is a government loan. It's an FHA loan, and that one, with just the minimum down of 3.5%, we can go down to a 580 credit score.
Wow.
So that really helps a lot, because a lot of first-time home buyers, one of the reasons they haven't bought a home is because maybe they've had some credit problems in the past, or they don't have a good credit history, and so that's something I'll walk them through too, is because that's one of the first things in the loan application process is we look at the credit report.
Yes.
And by looking at the credit report, I can tell right then, by looking at the credit report, I can tell right then if it's something we can do right then and there and start working towards the pre-qualification, or if we need to do some credit repair or build some credit, and we might need a few months to do that.
Oh, got it. So there's times when somebody comes to you and they're not immediately ready based on their current
Right.
credit score,
Yeah.
but you can help them
Yep.
fix their credit score
Yep,
and improve
absolutely.
it to get to the point where they qualify.
Yeah, and there's a lot of times we take a look at their credit and we see if there's something we can do to help them, instead of actually sending them to an actual credit repair company, because that is a lot more expensive.
Yes.
And a lot of times, lenders, because that's something we look at every day, we're pretty familiar with what items need to be done to help them clean up their credit and build a credit score up.
Oh, got it. So
Yeah.
you may be able to help people improve their credit score without going through
Yeah.
a service that they have to pay for.
Yes, and try to help save some money.
Well, that makes a lot of sense.
Yeah. And then the other, we were talking about the other myth is down payment. Again, that loan program does require 3.5% down, but there are loan programs out there to help first-time home buyers cover that down payment.
Oh, tell me about
So,
that.
Yeah, so one of the most popular is our program here in Utah. It's called the Utah Housing Loan,
Yep.
and it will allow the buyer to finance the down payment and a portion of the closing costs. It does have different stipulations, and that one is a little bit more credit score sensitive, and it does have income guidelines.
Okay.
So we need to take a look at that, because it really is more for your more kind of lower to middle income families. If it's somebody that combine husband and wife together, they're making $200,000, that's not really for them, because I guess they just kind of have they put the guidelines together for a reason, and they just kind of look at, okay, if between two people they're making $200,000, they should be able to come up with a down payment.
Yep.
Whereas maybe, we've got, some clients that are, more in the 150,000 together, and they still need a little bit of help.
Yep.
And that's what it's there for. But again, it is also credit score sensitive. So
Got it.
again, it comes back down to that credit report.
That is an important report.
Yes,
for sure.
it's the biggie.
But it's nice to know that there are alternatives that can help you with that big chunk of money that's your down payment on your first home purchase.
Yeah.
All right.
Yep.
Got it. I know one thing that often happens as somebody's starting to consider purchasing a home for the first time is they'll see an open house and they'll just say, oh, let's just stop by and take a look. And before you know it, they've fallen in love with a property and they haven't even talked to a mortgage lender yet. What are your thoughts on that? Is it important to talk to a lender before you even start the home buying process?
Absolutely. Especially if they're serious about buying a home. It's really good to talk to a lender first so they can make sure they're looking in the right price range.
Yes.
Because the last thing you want is for somebody to fall in love with a home and they don't qualify.
Right. You're just setting yourself up for disappointment.
And that's just really a hard conversation. To call them and say, I know you were looking at this home, and even if we're looking at, more down payment, or we just can't get you into that one.
Yeah.
And so it's always a lot better to be able to call them and say, guess what, I've got great news. You qualify for more than you think you do, instead of having that other conversation. Something too to kind of bring up is a lot of times right now, you see a lot of sellers that are willing to pay towards closing costs and rate buy downs.
Yes.
Something with the rate buy down that people I think don't realize is there's a program out there that's called a 2-1 buy down. And let's say the interest rate is 6%. So a 2-1 buy down means that the first year your payment would be based at 4%, and then the next year to 5 and 6. People are using that to try to get buyers to, hey, come and look at our home. And they're like, your rate will start at 4%.
Right.
That's great. But they still have to qualify at the higher rate. So like at the 6.
That's a great tip.
So
yes.
Huge tip, because that doesn't mean that, the interest rate is going to be 4, so we're going to qualify for more
I
home.
only have to qualify for this
Yeah.
level.
You're still going to qualify for the same amount of home, whether that first year is going to be, say, at 6%, or with the 2-1 buy down at 4%, you still qualify for the same price.
That is so smart.
Yeah. So
Yeah, I love that.
a lot of people don't really, I think, understand that. They're just seeing the big signs right now that'll say, hey,
of course. Yeah,
come and get this at 4%.
It's the name of the game. Well, I love that you're encouraging people to talk to a lender before they even start looking for a home. I know right now Utah's real estate market isn't as competitive as it has been in other times, but I know in other years when I've been representing buyers, if you aren't ready to go at the moment you place an offer, you're going to miss that house. You can't. If you think back like 3 or 4 years ago when the housing market was really hot, as you submit an offer, you need to be showing that you are pre-qualified. You need to be showing that you're ready to close within the next number of days. And if you're not ready to show that, then your offer's not going to be considered.
Right.
Even. You could very well miss the house that you fall in love with if you don't have your lending lined up in advance.
Yeah. Honestly, I don't even really know many agents that'll even take a client out to show them homes until they have them pre-qualified.
Yes.
Yeah.
It is.
And then too, it makes your offer stronger.
Right.
It's like if you found the home that you really like, you want to make an offer, and attach a copy of the pre-qualification letter with that offer, so the seller knows you're serious.
Yep.
And that you're not just.
It's a small investment to meet with a lender like you.
Yeah.
To get pre-qualified and get ready to go with a home purchase. It just saves you potential heartbreak.
It really does, and it doesn't. Not only does it not take much time, everything is done pretty much electronically nowadays. So they can fill out the app just on their phone, on their computer. Takes maybe 15-20 minutes to kind of fill in the blanks on everything, and then I receive it. The first thing I take a look at is credit. Start to play with the numbers to let them know what price range they qualify for, and then from there we can be able to issue a letter right away to the agent, and then that way you have it with you, and so when you're ready to make that offer, you have it. And so it's really fast for them to do, and the best thing about it is there's no cost. A lot of times people will wonder too, they're like, oh, well, we didn't get pre-qualified because we didn't know how much it would cost. And there's no cost up front. Yes, the loan does have closing costs once you do find a home and you close, but even something like pulling the credit report, that is the closing cost that will be paid at closing. That's not something you have to pay for up front. The one thing that usually does have to be paid for up front is the appraisal.
Oh, right.
Yeah.
But that doesn't come until you've actually found the home and have an accepted offer. Okay, that's great. So you've talked a lot about credit score already and your credit history. Are there any other factors that a lender is going to be looking at besides the credit score?
After the credit and the credit score, the next big one is going to be employment history. That's a big one too. We're always looking for a 2-year work history, which really isn't too much to ask for, just what they've been doing for the last 2 years, but we're wanting consistency. If anything, we're just wanting to make sure that they have consistent income coming in every month to be able to make that mortgage payment.
Yeah, a lender is really looking to say, how comfortable am I giving money to this person based on what I see of their credit, their employment, their life.
So employment is a huge one, and it's always really good to have us take a look at it, especially if your income is not a straight hourly wage, 40 hours a week.
That shows up on a paycheck.
If there's something different about it, let us know up front. If it's you make a lot of bonuses, commissions, overtime, anything like that, has to be averaged over 2 years. And so then that's why a lot of times, we need that 2-year history. And then that way then we can use that additional income. First responders, a lot of times they have shift differential. And so, again, it's just good for us to know up front so we can know how to calculate that income and have it done correctly so that we don't have any surprises and tell them, this is the amount you qualify for, and then we verify everything and it isn't. So, we definitely try to make sure we verify everything correctly up front.
Yeah, it seems like your job as a lender is to gather all the facts, gather all the documents, and be able to present a case as to why this loan should be approved.
Right. Yeah.
So for somebody who is thinking that they might want to buy a home within the next year, let's say, maybe they're not ready to start the loan pre-qualification process, but there are steps that they can be taking to make sure that they are prepared when that time comes. What are the types of things people should start to get in order if they're thinking of making a home purchase sometime soon?
Really, it kind of comes back to the items that we've been going over. Again, the big one is credit. That seems to always be the main holdup of somebody being able to get pre-qualified now or later. And because whether it's they've maxed out their credit cards, or they've recently had a couple 30-day lates, that affects your score. Your score affects your rate. And so a lot of times it is that. So if they're still thinking they're 6 months to 12 months down the road, it's good to have us take a look at that. Obviously, we know things can change, but we try to really stress the importance of try not to have things change. If anything, let's look at the credit and say, okay, this is what you need to do. And from there, we'll start building on that and try to improve it. Another one could be employment. If you have somebody that's just working a seasonal job, we're not going to be able to use that because obviously it's seasonal, so it's not something that's consistent. And so if it's something that someone is out there working right now and they're like, well, I've got this job, or can I pick up another job? Now that's another topic as well, because unfortunately you have to have a history of 2 jobs for 2 years to use part-time income. If you have a full-time job and you have a part-time job, we need to show that you've had both of them for 2 years.
That makes sense.
Yeah.
And it's not necessarily a problem if somebody has a job change within those 2 years.
Right.
As
Job
long
change is
as,
fine.
Similar earnings or whatever, that's all fine. But you just, again, want to see that consistency in the payment history for that job.
Definitely.
Okay.
So that's just something that if they're thinking down the road, that's what they want to buy a home, then it's always good to talk to a lender. And I have people that'll tell me that. They're like, you know what, we're not really planning to buy until next year or something, but that's okay. Let's take a look at it now and see. And for the fact that sometimes that down payment, the big difference with that down payment assist program is it has a slightly higher rate, and then so does the payment on the mortgage that's going to cover the down payment is a higher rate. And so a lot of people try to save up their own down payment so they can try to get a lower rate and not have a higher rate on the down payment portion. So people can, if that's one of the reasons they're waiting, is to be able to have the down payment, or even if they're getting a gift from maybe mom and dad or something, and maybe mom and dad said, well, you know what, we can gift you this amount of money, but we're not going to have it available. Sometimes people are telling me, they're like, we have a CD, and it doesn't mature until, it was a 6-month or a 9-month CD, and that's where our money for down payment is. And so we wait.
We wait.
We wait.
Exactly right. But all this that you're discussing kind of goes back to the fact that if you think you're going to be buying a home sometime soon, might as well jump on the bus and come and see you to talk through the different options. I mean, I would imagine sitting down in a short conversation, you could pretty quickly determine what the sticking points are for somebody's situation, and what they might need to do differently in order to qualify.
It's real quick. The process is really quick, actually. Just over the phone, when I first talk to them, a lot of times I try to do some pre-screening right then and there. So I already know if we're going to have, a couple complications come up or not. And then I have them fill out their loan application, call them back, review it. And, a lot of times we can do the difference between a pre-qualification and a pre-approval is with a pre-qualification, it's just based on what they tell me over the phone, and they fill out the loan application. I look at the numbers and just say, okay, based on what you've told me, this is where we're at.
Yep.
And then
it's an estimation.
Yeah.
So it's like I think we're right around here.
This is where we're at. And then I ask them, to send me documentation to back up what they've told me.
Yes.
And so obviously I pull the credit, they don't, but I'll need their income statements to verify that income to turn it into a pre-approval.
Yes.
Yeah.
Okay, so to go back on that point, what is the difference between pre-qualification and pre-approval? How would you spell that out?
Well, so the pre-qualification is when I just kind of talk to them over the phone, and then they fill out the loan application. And so right now everything I have is just on that application. I don't have anything to verify what they've told me. I don't have income documents. I don't have bank statements to show, maybe like say they are coming up with their own down payment. On the application, I can say, yep, it looks like we're good, but so that'll be a pre-qualification, and then the pre-approval will be when they actually send me in their documents, and we can, get that through underwriting. All lenders also have what's called an automated underwriting system. So we run their file through that system, and it lets us know that based on what we have on the application, if we can provide the documentation to back it up, the loan's approved.
Got it. So when you have a pre-approval letter, your lender is basically saying, we are ready to go whenever you're ready.
Yep.
That's a really strong position to be in.
It's a very strong position to be in, and sometimes it might be more of a pre-qualification if we're still waiting for some documents to come in. And if that's the case, so I'll, let the agent know and say, hey, we're still waiting for this and this.
Yep.
But, we'll get it. You just kind of have an idea if there's going to be any problems or not. But yeah, lenders, and obviously I've been in the industry a really long time, and I have a lot of friends that are loan officers as well, and everybody pretty much tries to kind of keep to the same thing, and we generally like to have our clients, pre-approved, pre-qualified within 24 hours. If somebody fills out their loan application in the afternoon, if you're not able to get back to them that evening, you do by the next day, and at least let them know how everything looks, and then have them send them, your documents. So they're ready, and they can get out there.
Yep, that's nice. And it does speak to the partnership that real estate agents have with mortgage lenders and with clients. It's a team process to get somebody from wanting to buy a home to actually owning a home.
Yes, it's definitely a team process. we can't do this without each other, so
Totally right.
yeah, we have to have each other. And so it definitely it makes it really good when clients are working with a lender and a real estate agent that work together, because that way they know that communication is there.
Yeah.
And you just know that they're in good hands. We want to make sure, like I said before, that if they're kind of nervous, I want to always just make sure, no, don't be nervous.
Right.
That's what we're here for. And, always kind of stress the importance of that is why we're here for. And, reach out to us anytime you feel like you need to. No question is a stupid question.
Right.
And so definitely want to make sure that they understand the whole process. And the numbers. I try to go very detailed with them as to what the payment includes. What an escrow account is, what are closing costs, because a lot of times, because we do this every day, we kind of forget that this is their first home. And so
Yes.
they might not understand some of the terminology that we use, and so want to really make sure that we sit down and go through that with them.
Okay. Yeah, that's great. It's nice to have somebody like you on the team, both as a client and as an agent. I appreciate the partnership.
You're welcome.
You've talked a little bit about some of the programs that are available for first-time home buyers. You mentioned FHA, you mentioned Utah Housing as well. Are there any other programs that might help a first-time home buyer?
Yeah, there are some programs that aren't necessarily for first-time home buyers, but even conventional loan program, they do have. If our client, as we're talking to them, their credit scores are higher, and conventional has a couple great loan programs with just 3% down, not 3.5%, like the
Okay.
FHA loan.
Yeah.
Yeah. The difference with those loans programs is the interest rate's higher, but the monthly mortgage insurance is usually lower.
Yes.
So it's kind of a catch-22. And if I'm able to have somebody in that particular position, the scenarios, I take a look at them and I'll compare the different loans for them and show it to them. Something else, just to kind of let people know, is if we have some people that are kind of looking outside of the city and more into a rural area, we do have what's called a rural housing loan, and that one you can finance 100% of the purchase price. And if by some chance you are a veteran, same as for a veteran, you can finance 100% of the purchase price.
That's right.
Yeah. And then something else to consider is different cities have their own grants. And so we can always check with that particular city where the client is looking and see if there's any grant money available.
That's really smart.
Yeah.
You mentioned looking for a home outside of the city. How far outside of a city do you have to be?
Probably pretty far. No, not really far, but there is a map. You can go onto their website and it'll pull up and to kind of show you the areas.
Okay.
I was just trying to think like in Utah County, like where the borderline is, but I'd have to look. I'm currently been talking to some clients that are pretty much like central Utah.
Okay.
And so, yeah,
Got
they're
it.
definitely in the rural area.
Got it. I guess this again leads us back to the point that if you want to buy a home, start by talking to your lender and you can explore all of the different options. You've got the expertise that can look at the client's situation, look at where they want to live, and
Yep.
figure out the program that's going to work best
Yeah,
for them.
and I do. I'll ask them, like that, like you just said, to like where they're going to live, because then it could possibly open up some different programs.
Yeah, totally right.
Yeah.
So many times people will focus on the purchase price of a home and what the mortgage is, but are there other things that people need to be thinking about beyond just the purchase price and the mortgage?
I guess really payment.
Oh,
Sometimes with that payment, they've been, maybe paying rent of $2,000 a month, and now the mortgage payment could end up being $3,000.
Yeah,
And
which is a big jump by itself.
Which is a big jump. And so even if somebody, their debt to income ratio, we take a look at what kind of debt they have at their income to come up with a ratio. And even though we look at it and we're like, oh yeah, you qualify, you're fine, I will always ask them, is there a payment that you would like to try to stay around? Where do you think you'd be comfortable?
Yes.
Especially because even though on paper they qualify for more, a lot of times just because they qualify for more, they don't want to go to the max.
Right.
You know, they're like, oh yeah, you know what, we don't. And I've had people that will do that. They're like, yeah, that's too high. We don't really want to go that high.
Yep. So what you qualify for may not really be what's comfortable.
Where they want to be, yeah,
for
exactly.
you.
Yeah, just because a lot of them, you know, first-time home buyers, this is their first home. And, you know, we just try to remind them that once you get into a home, there's a lot of other things with a home that that maybe you didn't have if you were renting.
Right.
And one of them could be a yard.
Right.
And then you got, you know, yard care, and there's just a lot more that goes into a home that maybe sometimes they don't really think about.
Yep, totally right. Like, if you've been renting,
Mm-hmm.
if you ever have a problem with your residence, you have somebody to call.
Yeah, you just call your
And
landlord.
they are responsible for the cost
Yep.
of any repairs. But
Yeah.
when you're a homeowner, guess who gets to pay that?
Yep, exactly. So, so I think it's really good that, you know, and again, it's kind of to, you know, our job as a lender to make sure that we're getting them into something that's in a comfortable range
Yeah, and
for
that's
them to be able to do.
my job as an agent too. I would really feel badly if somebody that I'd helped buy a home ended up in a home that didn't work for them, was too expensive, made them uncomfortable, and made them unhappy.
Yeah.
I don't want that for my clients.
Yeah.
So we work together to make sure that when the home deal does close, clients are feeling really comfortable, really happy.
Yeah, you don't want
They
that
got-
phone call saying, guess what, we can't make our mortgage payment.
No, definitely
Neither one
not.
of us do. Lenders don't want that, and you don't want to find out that they're going to have to sell their home.
Totally right. Okay, so let's shift gears a little bit.
Okay.
If you look back a few years ago, the Utah housing market was really hot. Interest rates were really low. Now interest rates are higher than they were at that time. Going rates around the 6% mark, depending on your credit score and things. Some people will say, I'm going to wait until interest rates come down again, or I'm going to wait until the housing market cools off a little bit in Utah to buy a house. Do you have any guidelines or feedback that you give to clients who are saying those types of things?
Yeah, you know what? We just always kind of say there's never a bad time to buy real estate. And whether the interest rates are a little bit higher or they've gone down, if you qualify, you should look into purchasing now. And the reason being is because what if the interest rates are 6% now? That's still a really good rate. And if the rate was to come down, we could always refinance and get you that lower rate. So you want to be able to try to get in the home now. The upside with that is you're in your home, you already start to build equity. Statistics are showing us that every year homes are appreciating. And so you want to be able to get into a home now and be able to capture that appreciation. And that way then you've got, you know, you're building your equity. Again, that could help when you refinance down the road if rates come down. Another thing though too is if interest rates come down, if you wait and interest rates come down, there's going to be more people out there looking at homes.
Yes.
And then once that happens, then that's going to actually drive up the price of a home. Because now you've got more buyers out looking, and that's when, once there's more competition, then, you know, when you've heard of sellers say, well, we want the highest and best offer, that's what happens if the rates come down. So again, if you can afford the payment now, get the home.
Yeah, I think we really are in a sweet spot right now in the Utah market, in that it's not extremely competitive right now.
Yeah.
So there are still deals to be had, and we're not seeing the fierce bidding wars that we did see at other times. And like you said, who knows what rates are going to do.
Yeah.
You can always refinance and go to a lower rate if we get to that spot. But the Utah market is projected to be one of the best markets in the nation
I know.
for a number of years from this point on.
Yeah.
Think about it. We've got the Olympics coming. We've got a strong economy. we're consistently ranked as one of the best places to live.
Yeah.
So I don't think that we're going to see a substantial drop in the real estate market here in Utah.
I don't either. And so again, it's just kind of, we're here to help. And again, we know I just said, it's like, if you can afford the home, get into it now.
Yeah.
And, don't wait thinking, let's wait for rates to go lower, because the minute you do that, then we're going to see the prices go up. And so you don't want to miss out on, that opportunity.
Totally right. This real estate is not like day trading stocks where you're looking for a dip and then a quick bounce back. It doesn't work like that in most cases.
Not quite.
We really have to have a long-term mentality. And, if you think back in time, like I wish I could go back 10 years in time and purchase a lot more property at that time, because we can see in hindsight, real estate values just go up over time.
Yeah, they have.
And to add to that, you get the enjoyment of having your own home that you can customize and make just the way that you like it.
Yeah, getting your own home, and if you want to paint those walls whatever color you want, and, hang up decor, you're not going to have your landlord get upset.
That's right. Just knock yourself out.
Yep.
All right. Well, we've covered a lot. Maybe let's end up with just a few rapid fire questions.
Okay.
First would be what is one thing that buyers should stop doing right now?
Ooh, one thing they should stop doing. I would say stop, kind of going back to credit, maxing out your credit cards. Try to pay those off monthly.
Okay.
Don't close those accounts, but pay them off monthly, because that'll help bring up your credit scores.
I love it. Okay, so that's one thing they should stop. What is one thing that they should start doing as they prepare to buy their first home?
Start doing, they could either start saving money. They could start just making sure that they've got stability, again, in maybe even like with their job. Because like I said, if by some chance they're doing a lot of job hopping or side gigs or something that's going to be hard to document, but if they know they're going to want to be trying to qualify for a home, kind of take a look at where you are, not just with your credit, but income financially, just to make sure it's something that we could be able to show is steady.
Yes.
Yeah. So
Love that. I agree. Get your finances in order.
Yeah, get it all in order.
As you can. All right. We've covered a lot, and I appreciate you taking the time to share your expertise and remind us of some of these basic principles.
Thank you. I appreciate it.
Yeah, it's lots of fun.
Yeah, I'd like to come back again and maybe go over another topic.
There's plenty to know in the
There
world
is.
of mortgage lending.
Yeah.
Okay, so I'd love for you to have the chance to talk about how people can reach you.
Oh,
what are the ways that you'd like them to reach out to you?
You know what? Always the best way is just phone call or text.
Okay.
Yeah.
Would you like to share your number?
Of course. So it's 801-915-4630. And are we able to put it like a link or anything on these?
I may be able to do that.
Yeah, we'll have to take a look at that.
Okay.
Because my website as well, they can be able to go on there and just be able to click on there and start the loan application. I generally do like to talk to the people first. So again, just even a quick phone call or text message, reach out to me first. Let's talk a little bit, and then I can send them the link. And then it's something they can even just kind of, pull up on their phone.
Yeah.
On a computer, just fill it out. And again, it doesn't really take that long. Most people tell me it's like 15 to 20 minutes.
Okay.
It's just personal information.
That's easy.
And then,
enough.
other than that, it's quick.
Okay.
Yeah.
I love that. I know from working with you, you are always right on top of it. You get things done, and you take great care of your clients. For anybody who knows me, I would recommend Leesa for you very strongly. She will treat you right in all aspects of the mortgage lending process.
Yeah. Look forward to it. This will be exciting. So hopefully we've answered some questions for people out there, and hopefully our phones will start ringing.
That's right.
Yeah.
Cool. Thank you very much.
You're welcome.
Is there something else you wanted to add?
No, I was just going to say there's something too. If somebody even wants to get a general idea of what the total costs would be to get into a home, they can reach out to me as well.
Okay.
Just to kind of see, because that, you know, maybe that's kind of playing into, they're wondering how much money they need to save. And then to, you know, they're like, well, what about all the fees that are involved? Yes, right now we are seeing a lot of sellers paying all the closing costs. But if somebody wants to have an idea about how much that would be too, they can go ahead and reach out to me.
That's
I
great.
can put it together for them.
Nice of you to offer your services. I
Of
know
course.
that just like me, we work hard to find our clients and serve them well in the process.
Yeah.
So that's great.
Yep. Okay. Well, thanks.
Good. Thank you too.